If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Before we dive into the details, let's discuss why engaging in a price war is ultimately no good for any party involved. Price wars may seem initially attractive for consumers as they offer them lower pricing. However, it's important to understand that no one truly wins in a price war, and we're going to explore why. Number one reason is eroding profit margins. That's right, this cost that's being saved by consumers has to be accounted for somewhere, and so the company has to bear the burden. And that can make it hard to achieve profitability and also, like I said, reduce margin. That's because lower prices mean lower revenue. For a growing company, that's a tough situation to be in. Lower revenue also means less money coming in to invest in innovation and growth. Number two is reduced brand image. Constantly reducing prices to remain competitive can give the perception that that's all a company can offer to sell its product, giving the perception to consumers that this product is lacking in quality or value. Consumers may question why a company keeps on slashing its prices, leading to doubts about a company's product reliability or long-term viability. Number three is unstable business practices. Engaging in price wars forces companies to make the sacrifices somewhere. They may cut corners when it comes to product quality, customer service, or even research and development. This ultimately harms the sustainability of their business, and so it becomes difficult to maintain a competitive edge in the long run without adequate resources. Price wars also have a negative impact on the industry as a whole. As other companies become encouraged to participate in a price war, the entire industry starts to become a race to the bottom. This can create an unhealthy market environment which hinders innovation and stifles overall industry growth. So those are all the negative things that come out of a price war, but let's talk about the importance of healthy competition in a market. Instead of resorting to price wars, instead of defining their products solely just on price, healthy competition allows companies to differentiate themselves through innovation, product quality, and customer experience. It fosters a market where companies strive to meet the unique and evolving needs of consumers. Now that we understand why no one wins in a price war, let's revisit the recent pledge made by these several automakers. The pledge made to avoid destructive competition and foster a healthy market where everyone wins. Consumers from an innovation standpoint, consumers where they get the best pricing, and companies where they don't have to sacrifice on margin and cut corners when providing products to these consumers. Okay, so a slew of automakers, including NIO, Tesla, BYD, XPeng, have vowed to join forces and promote healthy competition in the Chinese electric and the Chinese new energy vehicle market, putting an end to disruptive price wars that have been plaguing China for the past several months. And even in 2020, there were price wars as well, but it's been more prevalent, more so now than ever. The price wars in China gained traction earlier this year when Tesla slashed the prices of their Model Y by $7,000 each in China. This put pressure on several other automakers to come down in prices to remain competitive. It also sparked concerns amongst Tesla customers who had recently already purchased a Model Y for a higher price. Historically, Tesla slashed its prices only when it needed to. This sudden price cut sent shockwaves throughout the global EV market, highlighting the real-world implications of price manipulation. In response to this situation, initially some automakers like NIO stood their ground and said that they weren't going to cut their price, although they ended up having to cut their price and backtracking on their statement. Anyways, the point is that majority of automakers had to slash their prices to stay in the market, and so they did. Despite all the controversy, Tesla's strategy seems to have paid off. They had record-breaking deliveries in Q2 2023. They surpassed expectations, but now it seems that Tesla wants to play nice, and maybe they're doing this in order to have a better relationship over in China, which is not their home turf. So there was a pledge for fair market order. This pledge, facilitated by the China Association of Automobile Manufacturers, calls for fair market order and calls for commitments to regulate marketing activities and also avoid false marketing practices, prioritize product quality, and fulfill social responsibility. It's important to note that this pledge is self-regulatory and not legally binding. However, it demonstrates good faith amongst all of these auto manufacturers in China and hopes to put an end to these price wars. It remains to be seen whether this pledge will be effective or not, and only time will tell, but for now, it's a positive step towards a healthier market. Today I wanted to talk about NIO Life, which is NIO's lifestyle brand that is oftentimes overlooked by the cars. So if you go on NIO's website, you'll get a quick overview of what NIO Life actually is. Over here it says, life is food, music, exploration. Life is being together, living well, learning. Life is where you go, how you dress, and the joy you feel. To share a joyful lifestyle. So I thought this video would be important because just yesterday we were talking about NIO's positioning in the market and why Tesla cutting prices probably wouldn't hurt NIO as a brand, right? You know, their positioning is luxury cars. They're a user enterprise. Well, another aspect of the way NIO positions itself is as a lifestyle company. NIO Life was founded about 2 years ago. They sell many things like bags and luggage, small tech products, food, and just a bunch of other stuff as well, things like that. The brand ships over 1 million products per year. Now, 1 million per year, that's definitely a great number, don't get me wrong, but compared to the car business, it's certainly not going to be bringing in as much revenue as the car business. So that's why oftentimes I believe it gets overlooked. But what if NIO Life wasn't about generating revenue? So that's what we're going to talk about in today's video and why I believe NIO Life will actually help the brand out. So I think NIO Life isn't really about revenue. I think NIO Life is just about marketing and brand appeal. So Liu Ji, who is the head and senior director of NIO Life, said users recognize NIO Life's products mainly because of design taste, quality standards, and emotional connection. Among them, the design is one of NIO Life's core labels. So think about it, NIO really understands their target market and NIO Life is a reflection of it. What if NIO Life is a user's or prospective customer's first encounter with NIO? Will that drive their curiosity? Will that make them inquire about a NIO vehicle if they are in the market for a car sometime down the line, or if they're currently in the market for a car? Potentially, maybe, maybe not. But NIO is a new car company. At this point in time, the numbers are growing at a very good pace, but they're pretty niche. This is something that I believe that's not only going to help them to get their name out there, but get their name in front of the right people, i.e. their target markets. Liu Ji said a few other things as well. She said that half of the sales from NIO Life come from NIO users, and the other half obviously comes from people who aren't NIO users. So for a lot of people, this could possibly be their first encounter with NIO as a brand. Second of all, when she answered the question, why does NIO Life exist? She said NIO Life exists because at its core, NIO is a user enterprise, and NIO Life pretty much shows that NIO is user-centric. My last takeaway from her here is that she said that in 5 to 10 years, NIO will not be a national brand. NIO will be a global brand. They believe that the products and services that they offer deserve a place on the world stage, and she was very optimistic about them getting there. So one of the things that makes NIO so hard to value is that the company has so many different things going on. I mean, if you tell somebody that you think NIO could be going to $200 within X amount of time, they look at you like you're crazy and they're like, do you see where the market cap is right now? In my opinion, there's a lot more room to go for NIO, and a lot more room to grow, we'll say, if you actually look at the fundamentals. What they don't understand, in my humble opinion, is that NIO is so much more than a car company. I mean, think about it. They have a stake in a battery asset management company. They're venturing into e-commerce. There's the NIO Life brand, etc. I could go on and on. Even what I'm about to talk about in today's video, which is XPT Motors, a subsidiary of NIO that's 100% owned by NIO. And President Lee Hung-Quinn said a long time ago that XPT Motors is owned by NIO, but it will also operate independently of NIO. So that sparks some ideas with me, but first we're going to do a quick recap of what XPT Motors is, because I haven't talked about it in a long time, and there might be some of you who are just tuning into the channel or didn't get the chance to catch that video. So I personally think NIO is playing their cards right with the XPT motor business. Like I said, XPT Motors is 100% owned by NIO. They make the electric driving systems for NIO's electric vehicles. Now, back in 2020, there was a little bit of controversy around NIO and Tesla, a little bit of drama. William Li basically said that we will never see a NIO vehicle with a single motor, with a single electric motor. A lot of people took that to mean that he was talking about Tesla. We all know that there's a certain iteration of the Model 3 that only has one electric motor, and William Li says that people, and obviously that's a cheaper version, so William Li says that they are not going to do that to cut costs. Since that statement, President Lee Hung-Quinn has come out and corrected the perception that was out there in the media, basically saying that a single motor is okay for cheaper cars, not for luxury car makers. The reason, and then they also talked about it from a safety perspective. The reason why, he said, the reason why an airplane has two engines is in case one fails. A car should be the same, and they're taking that approach when it comes to NIO. They're taking that approach when it comes to XPT Motors, it looks like so far. So hopefully that sets the stage on XPT Motors. It was made out to be this no corner cutting, technologically advanced electric motor company that is owned by NIO. But before I get into why I think the company could be a major avenue of growth for NIO, we want to understand, is the company, does it actually live up to the hype? Is the company as high quality as they say it is? Is it as groundbreaking as it's been made out to be? So according to MIIT data, total 3-in-1 electric driving systems installed in 2020 was about 1.3 million. Now, to put that in context, NIO only delivered 43.7K cars. So 1.3 million total electric driving systems installed in 2020, and NIO only delivered 43.7K cars. And obviously when I say installed, I'm talking about the market. So basically what I'm saying is that you can imagine that a small chunk of these motors went into NIO's cars. So obviously they are operating independently of NIO. Since NIO, like we say all the time on this channel, is still a growing niche automaker, the vast majority of XPT's motors are actually in a whole bunch of different car companies. So with that, XPT ranked third out of all electric drive system suppliers, and they had a 17.1% market share, and that's really great. To top things off, the company grew by 108.7% year over year. So for me, so far, it's safe to say that XPT Motors lives up to the hype. And on top of that, if you need more evidence, this is actually just common sense. Their technology is part of NIO vehicles. NIO has ranked as one of the most high quality cars on the JD quality report. So anyways, now that we got that out of the way, here's where I see the opportunity. As Kathy Wood said, the writing is on the wall. Electric vehicles are the future. China wants to get rid of gas cars. We see that green is a bigger trend across the globe. Different governments are putting policies in place to get rid of gas cars. But the problem here is there's already a ton of these older automakers who have already been in the game. Well, China's making it harder and harder for you to sell your cars. You've made investments in internal combustion engine technology for the next 10 years. What do? Do you just cut losses on that? And then do you reinvest and try to build up your electric driving system for your cars from the ground up, or do you semi-consolidate and do you go with a proven company? So I actually think that it will be the latter for a lot of these companies. Companies are just going to use technology from a company like XPT Motors for a while until they figure out how they can create their own electric drivetrain. And there's these new companies that want to enter the game. Every day there's a new company coming out of the woodworks. They don't have the technology. I think they go with the company like XPT Motors. And ultimately, I think that long term, this is another avenue of growth where NIO can shine. So the long term story for NIO isn't just about how many cars they can produce or deliver, which will probably be exponential as they, disrupt these legacy automakers and the market kind of changes. People are going to want to go with the best product. If it comes down to, okay, you can only have an electric car, who's further ahead, who has the best technology, who's giving me the most bang for my buck or value, that's going to be a company like NIO. So we do watch that part closely, but there's all these other avenues in which I believe will contribute to NIO's long-term growth, and the valuation will continue to stretch, in my opinion, over time, of course.
Okay, so it's time to share some pretty exciting news, everyone. According to Deutsche Bank, NIO could be delivering 20,000 vehicles per month in the third quarter. Now that's a huge improvement and a pretty impressive milestone for the Chinese electric vehicle maker. Now, I've been saying this for quite some time now, even throughout all the negativity, but as with any growing company, there are ups and downs along the way. For the longest, it feels like we've been in a downward cycle where optimism about NIO was pretty hard to find. Well, it looks like the tide is now turning. Today we'll delve into the details and discuss everything that's happening with NIO. In a surprising turn of events, Chinese electric vehicle manufacturers experienced an unexpected increase for the month of June as far as deliveries. This could indicate a return to more typical consumer behavior and pent-up demand being released from consumers who have been waiting for prices to drop. It's an encouraging sign for the EV industry as a whole. Now let's take a look at Weizhou Li's deliveries for the month of June. For anyone who doesn't know, that's Xiaopeng, Li Auto, and NIO. Li Auto, one of NIO's competitors, delivered a whopping 32,575 vehicles. That's an increase of 15% compared to the previous month and an astonishing 150% year-over-year growth. Impressive, right? NIO, on the other hand, delivered 10,707 vehicles in June, showing a 74% month-over-month increase. However, it experienced a 17% decline compared to the same period last year. Nevertheless, this upward trend is promising for NIO and its investors. Another significant player, XPeng, delivered 8,620 vehicles in June. This accounts for a 15% month-over-month increase, although it does represent a 44% drop compared to the previous year. Nonetheless, XPeng's performance indicates some positive signs as well. Li Auto has once again led the pack of upstarts, setting a new monthly record. Meanwhile, NIO experienced a notable increase in monthly sales thanks to the rapid production of the ES6 model. Additionally, both NIO and XPeng are under pressure to generate significant growth in the second half of the year, according to Deutsche Bank, with the introduction of new vehicles, while Li Auto aims to maintain and build on its foundation as far as delivery. The ES6 seems to be scaling up well, and with a full month of the ET5 touring production ahead, that seems like a positive sign for NIO for the month of July. Edison Yu, our guy at Deutsche Bank, an analyst at Deutsche Bank, even predicts that NIO will be delivering 20,000 vehicles per month in Q3 this year. This forecast is based on price decreases and a flood of new vehicles hitting the market. Moreover, the insurance database's data further support these claims. Now let's break down these numbers a little bit to ensure an understanding here. If we look at the week of June 26th to July 2nd, then you can see that NIO is delivering about 585 vehicles per day. If you extrapolate this data over 30 days, that puts NIO at 17,550 vehicles delivered per month, 30 days in a month typically. Keep in mind that NIO is still ramping up production on their newer platforms, so being optimistic here makes sense. Let's take a look at what I believe will be NIO's best seller for a while, the ES6. As of now, it stands at number 10 on the best-selling list with 1,900 vehicles sold. The new ES6 was launched on May 24th and seems to be in the midst of its capacity ramp-up phase. It's a prime example of NIO's potential and gives a glimpse of what's to come, at least until the new EC6 arrives, which I believe can be their best seller. That wraps up our discussion on NIO's recent delivery numbers. It's undoubtedly an exciting time for the company with positive momentum building up. First piece of news comes from CNEV Post. According to the report, NIO has achieved remarkable delivery figures for the month. NIO's deliveries rebounded to 10,707 units in June as the new models are bringing relief to the company. This is surpassing market expectations and it's representing a significant increase compared to the last 2 months, where NIO was really delivering around 6,000 vehicles per month, and there was a lot of negativity around that. This achievement is a testament to NIO's strong market presence and growing customer demand for their electric vehicle. Now, if we talk about some factors that are driving NIO's success, there are several factors here. Firstly, the company has been expanding its product portfolio, offering a different range of electric vehicle in their NT 2.0 platform, which is second generation. They cater to different customer preferences. NIO's commitment to innovation and advanced technology has also played a crucial role in attracting customers. Moreover, the company's extensive charging infrastructure and high-quality customer service have further strengthened its market position. It's fascinating to see how NIO has managed to create a comprehensive ecosystem for electric vehicle owners, and I think this system will impact the industry as a whole. NIO's success highlights the growing demand for electric vehicles and the importance of building robust infrastructure to support their widespread adoption. The company's achievements will likely inspire other players in the industry to enhance their offerings, invest in charging infrastructure as well. This competition will ultimately benefit the consumers as they will have access to a wide range of high-quality electric vehicles, reliable charging solutions. The next thing that we're going to talk about here is very huge for NIO's future success. NIO's Navigate on Pilot platform is no longer in beta and they've began accepting subscriptions. According to the article, NOP has made significant progress. Now let's talk about this development. The expansion of NIO's subscription platform, NOP, marks a significant milestone for the company. NOP allows customers to subscribe to NIO's navigation system instead of purchasing it outright with the car. It provides a flexible option for those who prefer to not commit to long-term ownership. NIO has now moved NOP out of its beta phase and has started accepting subscriptions. This move demonstrates NIO's confidence in the platform and commitment to providing innovative mobility solutions. NOP Plus has started accepting subscriptions at 380 RMB, which is $52 per month. NIO is giving free limited access to certain customers as a way to incentivize them to purchase the vehicles. So this should actually drive demand for the company as well, which is going to be positive for sales, I'm hoping. Now, let's talk about how NOP's expansion is going to impact NIO's business model. It's a strategic move by NIO to diversify the revenue streams and attract a broader customer base. By offering a subscription-based model, NIO can tap into a market segment that values flexibility and convenience. Not only that, but services are usually high margin, whereas vehicles are not. That's why software companies have super high valuations, because the overhead is so low and their recurring revenue as well. This approach aligns with the changing preferences of modern consumers who are more interested in access rather than ownership. Furthermore, NOP's success could potentially influence other automakers to explore similar subscription-based models, leading to the increased competition and innovation in the industry. Tesla is already doing and succeeding with this. They just keep on increasing the price of their self-driving service, and that is high margin for the company as well. So my hope is that we'll see the same kind of situation over here with NIO. It's clear that NIO is pushing the boundaries of the traditional automotive business, but there may be some challenges that they could face in this endeavor. While NIO's subscription platform presents exciting opportunities, it comes with its own challenges. One of the major obstacles could be the need to educate customers about the benefits and advantages to this. Additionally, NIO will need to ensure that the infrastructure and logistics can support a growing subscriber base. Maintaining a high level of customer satisfaction will be critical in retaining subscribers and driving long-term success.
That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.